Hello, everyone. Today, Amit, Linda, Alex, Anna, Lionel, as well as myself, Braden, are going to be going over Wells Fargo's marketing strategy, starting out with Lionel and the company background.
Thanks, Braden. So, Wells Fargo is an American multinational financial services company founded in 1852 and has since grown to become one of the biggest banks in the world and one of the most known bank brands. This is shown in 2013 and 14, where Wells Fargo is ranked the world's most valuable bank brand by Brand Finance. And more recently, there came to light a massive scandal that I'll touch on in the next slide, but it's resulted in Wells Fargo having to settle with the US DOJ and SEC for over $3 billion. So, for the scandal, in September of 2016, it was uncovered that Wells Fargo had opened over 1.5 million checking and savings accounts and over 500,000 credit cards on behalf of their customers without their consent. This was caused by an incentive compensation program for employees to create new accounts. And following the scandal, applications for credit cards and checking accounts plummeted, and overall customer trust was and still is at an all-time low. So now moving forward into today, Wells Fargo has since launched several redemption marketing campaigns trying to regain its customers' trust and move past the scandals through corporate rebranding. They've done things like update their logo and market campaign taglines such as established in 1852 and reestablished in 2018. But as we'll touch upon later, this hasn't really been effective with customers at all. So now I'm going to hand it back to Braden to go over the big picture framework.
Thank you, Lionel, for going over the history and the background of Wells Fargo. Now, to evaluate the current marketing strategy of Wells Fargo, we're going to use the big picture framework. Starting out the business objective, the core business of Wells Fargo is to make people feel secure and alleviate financial stress by making their financial services widely available to both individuals and businesses around the world. And they do this by using an umbrella branding strategy, where they're broken into community banking, wholesale banking, and investment management services. And among their community banking, they have tons of product line extensions. For example, student loans, house mortgages, as well as small business loans. Now, their marketing objective is focused on an acquisition strategy where they want to acquire young adults, those 18 through 24. And their source of volume strategy is by using a flank attack strategy. And as we can see through the billboard, they're leveraging their best-in-class digital banking services, which ranks number one among all banks according to Statista. Now I'm going to hand it off to Amit and Linda to go through the segmentation, targeting, and positioning in the big picture framework.
Thanks, Brayden. A segment is a group of consumers sharing at least one characteristic that should make them collectively more responsive to a marketing effort. Retail banking, such as Wells Fargo, typically uses data analytics to segment customers by mutually exclusive and collectively exhaustive demographics, such as gender, age, or wealth. One common way is by generation. Another common way to segment customers is to divide by location. However, not all segments are targeted. Wells Fargo's current customer is typically older with a lower income than the industry average. Therefore, they're now using the Done campaign and digital banking to target younger generations such as millennials.
Common mindset that Wells Fargo wants in their consumers' minds is their relatability and willingness to adapt. They want consumers to think of them as the more relatable choice, making them the clear choice for their commercial banking needs. A perfect example of this is their Universal Truth ad campaign, in which they emphasize examples such as pursuing higher education and taking care of family as main points of advertisements, as these are goals that the everyday person wants to reach.
So for product, Wells Fargo's product strategy can be categorized into several branches, from community banking, consisting of loans, debit, credit, and savings and checking, to merchant services. In terms of price, consumers in the banking industry are price sensitive to a degree. To the extent that their current bank offers a reasonable price point for loans, insurance rates, and credit extensions, these consumers are likely to stay with their current bank due to loyalty rewards and other high external switching costs. However, competitors are lessening this burden with cash change rewards. Finally, for place, new and upcoming trends in the banking industry see the division between multi-channel banks, which are traditional banks with a feature-heavy online application presence and may not be as customer-driven as their mobile-first counterparts, those who design a bank around its online features and mobility mission.
So Wells Fargo has attempted to achieve a behavioral goal by promising checking bonuses. So banks need accounts and consumers need cash. This is why Wells Fargo offers cash bonuses for opening new accounts. These bonuses range from $200 to $700 depending on consumer versus business and checking versus savings. Wells Fargo has also attempted to achieve an image goal through public relations as it supports drive-up food banks at key locations in partnership with Feed America. Finally, Wells Fargo has attempted to achieve an information and image goal by reestablishing itself after its scandal a few years ago.
The large Wells Fargo account scandal, as discussed earlier, paved way for waves of consumer distrust and bad publicity that has crippled the business and has had lasting implications. Despite only 3% of Wells Fargo customers being affected by the scandal, 14% stated that they have already decided to move banks. And this is not including the 30% of Wells Fargo customers surveyed by The Atlantic who claim that they are currently looking for alternatives amid the scandal. Our first problem that we see in Wells Fargo's marketing strategy is their ineffective attempt to gain trust after a scandal of this magnitude. In 2018, 2 years after the scandal was uncovered, Wells Fargo attempted their Wells Fargo Reestablished ad campaign, where they introduced a new slogan and changed their logo in an effort to show that they have changed since the incident. In a survey conducted by Alpha, only 27% of consumers affected this and considered this an effective corporate apology ad campaign. This marketing campaign was seen as words without any real meaning by many customers who questioned how much Wells Fargo has actually changed. These failed marketing efforts have contributed to the aura of distrust surrounding Wells Fargo even to this day.
As previously mentioned, Wells Fargo is targeting younger populations. However, one problem that they face is the ineffectiveness of their ads. In a survey conducted of young adults, 85% said they'd seen advertisements of Wells Fargo. However, only 3% could think of Wells Fargo first when asked to recall the first bank that comes to mind for checking accounts, loans, and credit cards. This is in comparison to over 30% for JP Morgan, 16% for Bank of America, and 13% for Capital One. This problem lies in their inability to tailor ads towards younger generations. Through their use of marketing channels, reach and frequency, and viewer retention, they fail to make ads that are effective for this younger population.
So now I'm going to go over our solution to the first problem of regaining consumer trust after the scandal. So the main issue with Wells Fargo's initial redemption marketing campaigns is that consumers didn't really believe the overall rebranding and reestablishment efforts. They more or less thought that Wells Fargo was just changing a logo and pushing forward some new slogans without actually fixing any of those problems. And so our solution to this is radical transparency and change. We believe that Wells Fargo needs to start from both the bottom up and the top down and make some real operational and cultural changes in order to regain consumer trust. Customers need to be able to see these changes that are happening. And so we believe that a transparency ad campaign would be the best, where Wells Fargo doesn't try to bury its past, but instead acknowledges the issues and shows its commitment to improving customer experience and building trust. This could be displayed through a negative feedback ad where they can show specific issues that customers have with the bank, along with real examples of change as to how the company is fixing them. So we also put together a 5-box positioning statement to see how customer beliefs and actions could change with their new marketing strategy. And so you can see we move from the current belief and behavior of not really trusting Wells Fargo, not really utilizing their services, to our consumer proposition that Wells Fargo has committed and taken real action towards transparency and customer loyalty, trust, and satisfaction, which will thus lead to our desired consumer belief of trusting Wells Fargo with banking needs and opening a bank account with the bank. So now I'm going to hand it off to Anna to go over our solution to our second problem.
As a solution to this problem, we suggest that Wells Fargo does a digital marketing campaign more tailored towards a younger generation. They should use digital and online ads instead of TV and print. They should also focus on frequency rather than reach for GRP. And they could maybe even develop a slogan like Capital One's "What's in Your Wallet" so that consumers can recall Wells Fargo better. Finally, they should also decrease the possibility of zapping by using younger actors in their commercials.
There are a few risks we want to consider for each solution. The solution of an ad campaign centered around radical change and transparency could potentially reinforce negative views on Wells Fargo and bring the scandal back to light. We think it is important to act in the way that we should have since our past redemption campaign was received so poorly. We want to emphasize transparency is not going to be used as a tool for consumers to watch over us, rather a way to show we want to grow with them. With our digital ad campaign targeting youth, one risk is that we could lose out on the older demographic by focusing on the youth. Although the attention will not be focused on older generations, it is statistically proven that they are much more unlikely to switch bank accounts than the youth, making sense for why it would be the more important choice to cater to them rather than the existing customer base.
So for key takeaways, Wells Fargo has a long road to recovery, but after analyzing the marketing efficacy of the company, it's become much more clear that these two actions have the potential to help the bank regain trust among consumers and employees, as well as achieve their mission of acquiring a younger generation of bankers. Thank you.